Hello everybody. This is our FMG lecture 403 Finance Group. We already finished our introduction for international finance, international monetary system, and conditions and currency forecasting. Today we focus on unit number 4, which is balance of payment, which is on page number 63. Just go for that. Yes, the balance of payment. So we start balance of payment. Sorry to disturb you. So let's start balance of payment. In that, the concept of balance of payment we can discuss. International business transaction occur in many different forms. The measurement of the economic transaction between the residents of country and foreign residents of country is called balance of payment. The government required the data of balance of payment measuring the economic activity in way the country grow industrial, competitive, and being scheduled, which help in setting other economic to guide and health of the specific type of foreign trade and international transaction against the domestic country. All model economics prepare the public detailed transaction with the rest of world. The systematic accounting record of country's economic transaction with the rest of the world structure within which the foreign exchange rate from the form part of national accounting. It can also be looked upon a record of all factors which create a demand for any supply of the country currency. As per the IMF, the balance of payment is a statistical status for given period show the transaction in goods services income between the economy and the rest of the world. Balance of payment statement of the country important to the businessman, environment, consumers, and the government officials and statistic influenced by many countries. Variables like GDP, inflation rate, exchange rate, price, income, the major policy decision taking in government, including the fiscal and monetary policy taken in consider with a balance of payment. Multinational required the balance of payment statistic to predict the host country economic policies. Therefore, the balance of payment states that the country is inclusive and important to describe below. The balance of payment is a barometer of the country's foreign exchange rate. Balance of payment figure out the indicate the excess of demand and supply for the currency and possible impact on exchange rate. The balance of payment states it also the related with the overall saving investment balance in the country national account. The balance of payment, the forecast of the country market, political essential and the short run. Again, I am go back. So in this topic, we can discuss the basic of balance of payment, interrupt the balance of payment system in country, understanding the significance of balance of payments statement of the nation, distinguish between the various type of deficit in balance of payment system and their economic important, establish the relationship between the balance of payment variable and another economic variable. The various concept, related to balance of payment. The concept of economic transaction, the concept of residence, the principle of valuation in transaction in balance of payment. The concept of residence. The term residence means the individual who are generally center as a can be seen in rest of the given economy. They consume goods and services, participate in the productive process, and otherwise they carry the economic activity within a territory of a country. Means he is a Indian in concept balance of payment of Indian economy. So as per this, the according to IMF organization, NGO are considered to be residents of the country where they operate where they operate international organization in UN. The World Bank and IMF also consider the residents of any country every though even though they are not officially located various countries. The principle of valuation of the transaction in balance of payment. The balance of payment states of the every country include large number of transactions every year. To make them comparable, the necessary to value them the systematically. The uniformly the IMF means recommended for the principle of the formation. They given some points which related with that. These points are the principal points are the transaction should be valued in market price. Import and export should be valued in FOB base, means free on board. It means that cost of goods should not include insurance and shipment costs, either the export and nor in import. It should be recorded specifically as a payment of service. Many transactions determine Many transactions are denormalized. The foreign currency should be covered into the domestic currency and the exchange prevailing in the market as time to time transaction increase. Accounting principle of the balance of payment. As a IMF rules the regulation, double entry accounting system is adopted in India. Every transaction two entries must be made. One is credit and one side in debit. The leave aside errors or omissions, the total credit must be equal to the debit of the balance of payment. Should be always balanced. The transaction which create the demand for the domestic currency in the prox market entity to the balance of payment account. Any transaction created by the supply of the entitled to the debit side. Next term is category of balance of payment. The balance of payment is a statistical statement that summarizes all the trade and industry related transaction of country for the year or quarter with trading partners that nation. Complete bank of balance of payment account countries to board countries, the current account and capital of the financial account. The current account, the measure of the flow of the goods services, primary income and secondary income between the residential and pro. It includes transaction in varying the individual with row. They given one structure of current account. So, so as per structure, the import export point invisible the services, travel, transportation, insurance, government and non evasible classification, miscellaneous, transfer of private income in investment income and competitive employees in total current account is first and second term. uh, we verify the discussing the above points in below discussion points. The covered export import all movable goods where the ownership of the goods change from the residence and row vice versa. The value of export freight and the freight on board, the show of the credit items in import value, the cost of insurance and freight, and also show the debit item. The valuation should be on the uh, freight on board base so that the international freight and insurance are treated as a distinct services and not measured with a value of goods themselves. The choice due to the date of due to the date of uh, interquarters. The difference between the total credit and debit approaches the need of the column. This is the balance of merchandise and trade account. The deficit if the negative and the surplus is positive. So these are the main points which related with the current account first part, which is import export. Next is again we go back. Sorry for this inconvenience. Next term is invisibles. The balance of payment trade physical goods in distinguish the trade of services. It includes the services such as uh, transportation and the insurance. Income payment and receipt from the factor services and labor capital and unrealized transfer. Credit under invisible content of the service rendered by the residents and non-residents. The income earned by the resident from their own and foreign financial asset, income earned from the use by the non-residents of non-financial asset, which such as gift received by the residents from the non-residents. In the case of debit roll of the residents and non-residents get reverse. The freight charges paid to non-residents Spain and airline companies directly when the input are involved on the basis of the foreign exchange will appear in debit under the transportation. For example, the freight charges paid to non-residents stream or airline companies directly when the import invoice on the freight on basis is foreign headquarters will appear as a debit under a transportation. Profit remittance by the foreign subsidiary, the country company to present a the present represent as a receipt of investment income. It will be recorded in a credit under investment income. The credit entry of the GN include items like fund received from a government for the maintenance of their assembly in India. Under the heading of the miscellaneous, the payment of foreign technical consultancy for the profession services resulting by the will appear in debit item, transferring by the type of official and private in debit entity under a healing official transfer. The continuous item like a revenue consideration, professional service rendering by him the approach of the debit item. The transfer may be type of official and private. The debit entry under a government for the maintenance their assembly in India. Under the heading of the miscellaneous, the payment of the foreign technical consistency for the professional services related by him will appear in a debit item. So, this is the current account balances. Next term is the capital account. Next term is the country globally the capital flow occur in following form. The equity environment include FDI and F loan, banking capital, and rupee debit services or other capital. In the case of accounting, the increase in country, the foreign investment, the assets are debited, whereas any increase in decrease in country's foreign financial in the liabilities are credited. The transaction of the financial nature are enhanced into this account. So they given one structure that capital account which is related with the foreign investment and the foreign developments which are shown in this structure. So firstly, as we see the capital account, in capital account the foreign investment, in a part the Indian direct and portfolio, credit debit side and net. After that they given abroad point, and abroad what we have and what we can develop for the foreign direct investment. Next term is loan. Loan also external assembles in India, by India to India. Next term is commercial borrowing. Next short term. So these are the loan type, and these basic 3 points are covered for loan. Next third term is banking or capital, commercial banking, assets liability, non-residential development, other. Rupee debt services and other. So all that are come together and make in capital account. First to four, first to five, first to five will come together and the total capital account is going for. So these five items are come in capital account. Next, again, the other account in area of omission, overall balances, and monetary terms in IMF and foreign exchange reserve. So these are the items are covered in these other accounts. Next, next that the balance of bank balance of payment statement, in that the trading balances, current account balances, and next is capital account. So they all together comes in a account. The given one formula, the balance in current account plus balance of capital account and change in the monetary transaction is equal to 0. So these are come together, it may mean to be 0. So this is the correct action for accountancy related with the balance of payment. Next term is principle of the timing and recording of the transaction. The measuring the trade should be recorded with when the changes in ownership taken place. Trade in services is to be recorded with the services are actually recorded. Interest divided and other payment are to be recorded with they are due the payment. International loan drawing and record and at the time of nature distributing of the loan and not when the leading committees to lead or a scan the loan. The rule is both the capital and current account transaction are recorded within the change of the ownership of the asset taken place. The principle for the timing recording and transaction. As per the IMF manual prescription, there are some rules recording transaction in the balance of payment. The measuring the trade should be recorded within a change of the ownership take place. Trade is services recorded within the a services are actually rendered. The interest and dividend other like payment are to be recorded with the are due and payment. International loan drawing and recording at a time of actual distribution of the loan and not when the leaders committee and lead of the scan of for the loan. Next term is the international flow of goods, services and capital. In that the exchange rate, inflation, trade barriers, income, international prices and risk and return. These are the all come together. Next term is domestic services and investment of the capital. They given one formula, national income is equal to E plus S to infinite, spending plus saving. They given some statistical data for you. You just read it afterwards. Coping with the current account deficit, the current account deficit is not a present solution of the growth population faced by the developing countries. Way of deficit being financial and the process for which it make use views are also very important. If the deficit being fascinated for the investment, the first generation return to the country and may get a problem because of the reply of borrowing increasingly high cost. So given this formula, they discuss hence the current account deficit can be beneficiary for the countries in the short term. It is also not sustainable in the long term due to the accompanies the payment problem. Therefore, they are right the need of correct and imbalance which can be done by the increasing nation income relative by the investment in the country and the increased saving related to the domestic investment may measure which they are have desired the effect and the various will not be able to correct trade deficits. In economic, the degree of which capital move according to free arrows broadly the critically important in country balance of payment. The USA is expecting the deficit in the current account balances over past 20 years. This similarly the enjoy the financial accounting surplus. The profitability of the main reason of the USA is to is to maintain enjoy the financial accounting surplus. It is a profitability maintained reserve for the USA to maintain this dollar value over these two and affairs decades. So these will be all covered in balance of payment chapter. In that we can already finish the various keywords related to balance of payment, which is capital account, capital mobility, capital risk, and what is the current risk. These factors are covered here. Current account, economic activity, financial capital. These are the mainstream of the balance of payment. Trade deficit, inflation uh, are the points for balance of payment. Next to that, the foreign exchange market, which is discussed in next lecture. What is foreign exchange market and organization of the foreign exchange market, spot market, forward market, um, forex, and the summary for related that. So these are the points which in balance of payment. Today we stop here. In our next lecture, we can um make continuation for this. Thank you.